The trends are very interesting. So we see, obviously, our penetration in Karachi, Lahore, Islamabad is much more. Then we have the next cities, which I would call the tier 2 cities, the Faisalabad, Gujranwala, Hyderabad, Sialkot, those types, Peshawar, that strength. Those are tier 2 cities. The penetration is okay, not too bad. Then we struggle on the next 25 odd cities. We're in 35 cities right now. And the struggle over there is not around getting them to pay online, it's just getting them to switch from offline to online, just to use an app rather than call and do a transaction over there. But that will come up with time because as more youngsters become eligible for work, enter professional life, start earning on their own, they become independent, they automatically start using apps like ours. Now, if we come to the comparison between the KLI and the next 4 or 5 cities, the biggest difference that we see is the number of transactions in KLI that happen on a credit card or a debit card of a bank versus the number of transactions that are happening through a mobile wallet. The penetration of mobile wallets is very, very high in the tier 2 cities. They are much more than our tier 1 cities. So that's a very interesting. Even if you check the consumption of social media, there's a higher percentage on TikTok over there rather than KLI. And I'm not even talking about I'm talking about SEC A and SEC B class individuals. Not talking about the lower sector. So even over there, the consumption of TikTok is higher than in KLI. So that changes the whole mode. It changes where we advertise. It changes how we get new customers. It changes what messaging we need to do. Similarly, on mobile wallets, our riders have 2 mobile wallets or 1 digital wallet of a traditional bank. These 3 wallets, majority of them have all 3, or they have the option to choose one of them. And that's how they collect the cash and then they pay into our accounts. So without this, it would have been a totally cash economy. And they would have to come to the head office, deposit the money. Imagine how difficult that is, how much time that takes, the leakages that may happen, the cash loss that may happen inadvertently. There is fraud as well in the country, but inadvertent, cash loss also happens. You're taking out, change and whatever, something falls. There's a challenge. You tend to forget which one is my money, which one is the company's money. It's difficult. Sometimes you may end up losing as a rider because you gave me more money than what was due. Anything can happen, right? So those are areas where we definitely are very thankful to the telcos for the mobile wallets in general, and we see that penetration is very good in terms of not just penetration, in terms of usage. Maybe the penetration is higher in KLI, probably because maybe someone like you and I also have mobile wallet accounts, but we may not use them. But over there, they're all using them. That's their primary account. They're not using a traditional bank account. So now with the digital banks coming in, I think that gives a huge edge to all of them because they can now operate anywhere they want and get a customer from anywhere they want without having to open a physical branch. So the reach just changes. I think one of the biggest challenges that we have to solve for is trust. And that's where we struggle. And by we, what I mean is the industry and consumers in general. The biggest complaint that we have on our platform in terms of when they're placing orders and they want to choose a card and pay, there used to be a big issue in terms of transactions being rejected, which over time, the technology has advanced. I think State Bank has been setting targets for the banks, so that has worked well. The schemes have played a good role. The payment gateways have played a good role. So it's become a lot, the acceptance rates have really skyrocketed, which is really good. So it helps us as the service provider. It helps the consumer get a better experience as well. So I would say has been resolved pretty much at a good level. But the struggle that remains is around trust around refunds. So the challenge is not that will I get my order or not. The challenge is if there is an issue, will I get my refund or not? And that's where we struggle. We struggle as an industry, and we really need to sort of work a lot more on that, because unless and until we solve for that, we cannot scale at the level that we would like to scale. We want to do cash to online at doorstep. But that's not going to work again if people struggle with refunds, because that's money gone directly from your account. It's not from your credit card, it's directly from your bank account. So how do we solve for that? That's the biggest question that we have for today. Based on my discussions with other leaders in the industry, I don't think there are many organizations that go beyond 15 odd percent of online. So like 80-85% is cash, still cash for them. In terms of the number of transactions, maybe value wise might be higher, because if you want to do a big transaction, you're not going to carry cash. But number of transactions wise, I don't hear of anyone saying sharing a much bigger percentage. For us, it's actually very promising. So from our top line, in terms of the GMV that we have on a monthly basis, on weekends, our online transactions go higher because there are more transactions by maybe people who are more adept to using cards or paying through card on the app. So it's almost a 50-50 split on weekends, which is great. On weekdays, we average around 41-42% online, and the remaining is cash. So we've come a long way. Over 5 years back, we used to be less than 10%. Now we are, on average, weighted average, if you take it out, it's around 40-45% on a monthly level. So that's huge. That's almost like a 9-10x jump over 5 years, so which is great. We've had some great partners in terms of the banks, in terms of the schemes. They've been very helpful. Right now, again, we are still a category creating market. Category not just in terms of for us, but category creation in terms of using your card, debit/credit, or a wallet account or a mobile wallet account for your regular transactions. So we're still creating that category in Pakistan, right? So there's a lot of incentive that needs to be pushed, and that's what we've been doing. We've tried to keep incentives running for a full year, multi-year. So the same discount, the same sort of partnership, ideally on a year-on-year basis, so that customers get used to it, give them enough benefits for them to try online payments, and then obviously that's where the service levels also come in, to make sure that once you are paying online, you get the good delivered to you in the right manner. And if you struggle and there's a refund, then that happens quickly. Once you go online, then there's a low chance of you coming back to cash. So it's about getting that first experience in. How can I get you to get that first experience in and give you some added benefit? We still need to incentivize users because it's a challenge. We are unfortunately incentivizing cash. Why? Because what happens is, as a consumer, you think it's a zero friction and zero risk order. If I don't like it, I won't accept it. So which is a bad, extremely bad thought process, because there is a whole cost associated with the restaurant making that food, or the shop giving us that good, or the home chef making that food, the rider going and picking it up and coming to you to deliver, right? Last mile is the most expensive in the whole logistics leg. If you do a calculation of per kilometer cost, it's the highest. We'll supply goods to businesses, which is generally our restaurants. Sometimes we also supply to large commercial entities as well, like offices, banks. Because we operate completely clean, so everything is documented. Their payments also come through documented channels. There's taxation involved over there as well. So everything is clean and sorted for us. But we only work with the large clients, because if you go to the smaller clients, they hesitate. Why? Because right now they have arrangements through cash. Again, P2M converting into P2P. They have cash transactions happening, and they don't want to give up that and come to a documented economy where they will then come into the eyes of various authorities. And that's the challenge. There's a lack of trust. Again, the same trust we were talking about in terms of refunds. The same lack of trust revolves around B2B services that you procure. Even as a consumer, if you're procuring something, let's suppose you're buying something for your house or furniture, you will end up paying cash because the vendor will not accept a transaction. They will not accept a check. They will not take a card. If they take a card, they will charge you 2.5-3% on top, a processing fee. While it should be the other way around, where if you're paying cash, it should be more expensive. If you're paying card, it should be cheaper. There has to be an incentive that needs to come from the government. We need to work on that, rather than trying to tax everyone who is doing an online transaction, because that will just push them away from documented transactions. We need to figure out what we want to do on a larger scale and then start implementing those. We met some of the authorities as well, and they were to be honest, they were very open to listening and trying to understand. They were explaining what they were trying to do, and we suggested, okay, why don't you just incentivize everyone to just document it? That's it. Just get everything into a documented channel and don't touch anything, don't tax anyone. just getting them into the documented economy also increases the size of your economy, right? Because if the undocumented economy is bigger than the documented one, so that's a challenge, right? How do we increase our GDP? Just by documenting more, we can just increase our GDP. It's as simple as that. So let's do that. So that's one. Second is incentivize people to move. Like, for example, I love the idea of how restaurants give a discount on card transactions, right? It's brilliant. I think it was such a small thing that started in COVID in one province, then the second province also, adopted it. I hope all of Pakistan adopts it as well. Reduce it. I am sure if you go back 5 years and see the numbers over there in terms of percentage of tax collected versus now, it definitely has increased. We see it increasing on our platform because the number of orders that we do, because we're growing, that all of that is getting documented as well at the same time. Those restaurants are also getting documented. They have gone out, a lot of them, and proactively documented their dine-in as well with the tax authorities. So from a B2B perspective, it has to be an incentive for them to be able to move away from cash to online or to documented sort of economy. And we need to get that done. There is no other way around it. We can delay it as much as we want, but without this happening, those organizations also will not grow, because organizations like ours or other organizations that do B2B transactions, they're not going to grow if they have cash transactions. Their sponsors don't really care about cash. They care about what's documented, what actually hits your bank accounts, can be attributed to a customer that's a paying customer, because there's tax liability on them as well. So we need to have that documented, otherwise it's going to have a big challenge even in terms of investments coming into the country.